Thanks. Thanks for the Future Facing Commodities Conference for having me, and to the organizers. Indeed, vanadium is a future-facing commodity, and I'm very proud to be largely representing vanadium at this conference. And hopefully today you could think about three questions as I'm presenting. Why is vanadium really interesting? Why is it interesting right now? And why might Australian vanadium be a really interesting way to get some exposure to that thematic if unfolding in front of us? Please, in your own time, review this and understand it. Australian vanadium, for those who aren't familiar with you, our core thesis is to be very competitive in producing high purity vanadium oxides. We have a tier 1 asset in Western Australia, and today is the first time we've presented to a public conference like this after we have done what is a very important step for our business, which is to merge with Technology Metals Australia, our neighboring business, and create a 1 + 1 = 3 outcome, where we are advancing one of the most advanced vanadium projects on the planet, and indeed underpinning our thesis to become the world's next primary vanadium producer. Why it's a tier 1 asset is because even before the merger, we were underpinned by a 25-year mine life and a C1 OPEX of $4.40 per pound, which puts us and any vanadium producer below $5 a pound in world-class territory, where we could survive any commodity price cycle, being a lowest quartile producer, and then benefit in the upside as these thematics as a battery metal unfold. Indeed, being in Western Australia is vitally important because currently 85% of the world's vanadium supply comes from Russia, China, and South Africa. So there's a strong need for jurisdictional diversification of supply. Vanadium is a critical metal used in aerospace and defense applications, and equally for the energy sector, it's vitally important that vanadium plays a role in decarbonization moving forward. So the recent merger unlocks the corporate synergies which underpin us becoming a much more bankable asset, but also it unlocks physical synergies that I'll talk to you about today. And then there's the market. So there's this incredible moment happening right now that we are really excited about, where long duration energy storage, in the speak of the energy sector, that are batteries that can move electrons for 4 to 12 hours. That piece of the sector is new, and there's this unique 20-year-old technology that has been commercialized at gigawatt-hour scale called vanadium flow batteries that are uniquely economic and uniquely technically a good fit for long duration energy storage. There is also a significant dearth of other technologies that can meet the need. And for perspective, there's a 48% CAGR forecasted for that energy sector between now and 2044. It's a staggering terawatt-hour story, and even if vanadium plays a small part in that, it's going to be incredible. And I think what's giving us a lot of confidence right now that this is a here and now story is indeed, like in lithium, China are first movers. They are installing gigawatt-hour batteries. Literally yesterday, they announced another 1 gigawatt-hour battery going in. Last year, they put in 5 gigawatt-hours of vanadium flow batteries into their grid. They're poised with announced projects of 15 gigawatt-hours going in this year. And I'll elaborate on this further. It is a China story right now in terms of really driving that demand change, but we're also seeing scale adoption of this outside of China, and we're really excited about the opportunities for us to participate in the energy markets in Europe, the US, and Australia. Australian vanadium, of course, our core moat for being competitive is to be a low-cost producer of high-purity vanadium oxides that are really suitable to battery and critical metals applications. We're laser focused on getting that done, but equally, we want to highlight this business has this wonderful optionality built into it. In 2023, we constructed a commercial scale electrolyte facility, and just last week, we were very proud to announce that we have already commissioned successfully and produced battery-ready electrolyte. And we have another business that we've owned for over 5 years that has been doing all the hard work to build this incredible network of customers, battery manufacturers, and a project pipeline in vanadium flow battery use at exactly a time where this long duration energy story is playing out. So the optionality for us to then leverage our ability to already be an electrolyte manufacturer and all of that IP built into VSUN Energy allows us to continue to build other value streams in the business that we look forward to working on. and this really is that time. So why is this happening? Variable renewable energy factors are increasing dramatically in many jurisdictions, places like China, where renewable energy needs to be moving electrons from day to night. And indeed, China is, by 2025, would just on announced projects alone would indicate you'd need about 11 of our projects in 2025 to meet that demand. Now, there will be other supply-side responses, but as a low-cost producer, we're very well poised to participate in that sector. And whether that's assisting China with supply or other jurisdictions who are also adopting the technology, we're really excited. And fundamentally, we think this is that inflection point. 3 years ago, 1% of vanadium went into batteries. Currently, 10% goes into batteries, which in and of itself we think is a structural change. But there's a point where it truly, historically, was a steel alloying agent, and then the dominant demand side factor, we think in the very near term, becomes batteries. The other thing happening in China, and as a lithium person spending the last 5 years there, I just see wonderful parallels here where China is deploying a similar playbook, and they are developing not just the batteries and building them out at scale and successfully commissioning them, they're also building factories. So here you see, just in the last 12 months, factories for flow batteries that have been announced that would be the equivalent of 25 gigawatt hours per year. That's about 25 of our operations to meet that demand. And we're not naive if some of this doesn't come to pass immediately, but some of it will, and just a small fraction of this really represents something that I think creates a compelling case that vanadium will flip from being a steel metal to a battery metal. Very quickly on our project, it is important that we're in Western Australia from a jurisdictional standpoint and from an ESG standards standpoint, and all the benefits that flow from being in the wonderful ecosystem that we're so grateful to operate in Western Australia. But importantly, West Australia in the Midwest here has a jurisdiction scale vanadium opportunity, and I would personally be so enthused if we could create a lithium story like we did in lithium, where Western Australia has now become the largest lithium producer in the world. There are a load of VTM-style deposits in this area. Of course, I'm going to tell you ours is the best, and indeed there are lots of other people who would conclude that. And we are indeed the most advanced vanadium project in this area. But we want to see our project as not just stage one, which is the very large-scale, low-cost producer story, but if the demand follows, we want to be poised to participate in the growth of the sector. Just very briefly on the merger, it is a really important story emerging for us where we achieved the corporate synergies through the merger in February, but we're really just now coming to understand the physical synergies that when we can actually remove the invisible boundaries called tenements, right, and then have an optimized way of mining the ore body, there's actually ways that we can continue to further improve on this tier one asset in terms of operating cost and capital cost. And we're working very diligently now to do that. So in April, we expect to announce the combined mineral resource estimate, which is taking two 25-year mine lives, unifying them, removing those invisible boundaries, and creating a 1 + 1 = 3 outcome. And then also launching what we are calling the optimized feasibility study, where two companies have world-class DFSs. We're taking what the optionality created out of the merger can do and building that into what we think is an even better asset in an OFS that will then underpin the financing of the project. On the corporate synergy side of the merger, this is really important. What we have done is de-risk the path to financing, and importantly on the debt side, this is something we're working very hard on. That prior to the merger, it was a difficult ask for favorable government funding to get behind us. Now, with one company owning the entire ore body and in the advanced state we're in, and in very advanced discussions with those favorable parties, we do expect to be able to be successful now in garnering the support of those favorable debt funding opportunities, and we're also working very hard on the rest of the debt package. Importantly, last year we secured a $49 million federal grant. This was paid out in a first tranche of $10 million before, but some catalyst to watch out for is we're working very hard to unlock the additional milestone payments in that grant, and I think it's a wonderful way for us in a non-dilutive way to continue to get working capital to develop the asset. Importantly, through the merger, we retained a very supportive investor, being Resource Capital Funds. They're a very sophisticated investor and a great partner, And they really do believe the vanadium thematic, and particularly the role that flow batteries will play as a fully commercialized, ready-to-go technology that's highly economic for long-duration energy storage. We continue to work hard on additional strategic partners, and a big important piece of the puzzle is offtake and making sure those are the right partners and ideally linked to the energy sector and ideally with equity for alignment is things that we're running to ground, and throughout the year we look forward to updating the market on that. So catalyst-wise, look out for the MRE in April, look out for a project update in June. We also are diligently working on a scenario where two businesses were very well advanced on our permitting, so making sure that we unify those permitting processes in the most expedited way and making sure it gives us the optionality in the asset that we need is important, and we'll keep updating the market. But this business is one of the most advanced in terms of permitting to a very high ESG standard level that you'll find in the vanadium sector. We talked about offtake, but there's also some co-product opportunities here that we're just putting our foot down on offtake, securing binding offtake to just make sure that aspect of the project is de-risked in the near term. And so all of these strategic imperatives are better enabled by the merger, and really just completing it in February, we're just getting started at really putting the foot down on the pedal under the lower risk scenario of really proving up that this asset is investment ready, and indeed we can move towards production in the near term. In summary, 25-year mine life before, but with the merger, you've taken two 25-year mine lives and also doing a 1 + 1 = 3. It's an incredible scale asset. We already previously in the DFS had a 440 C1 OPEX. In the vanadium world, if you're unfamiliar, if you're less than 5, you're a world-class producer and you can survive the commodity cycles. And for us, as people in our team who have operated vanadium assets, it is vitally important to be competitive in producing low-cost, high-purity vanadium oxides. That's our story, and that's our core thesis. We also are already successful in producing electrolyte, participating in the value chain upward, and we're poised right at that time where there's an inflection point happening. And vanadium has gone from 1% 3 years ago to 10% in batteries. And I hope some of those statistics in China can draw some parallelisms with the lithium story, where indeed the transition is going to happen very rapidly and move from being a steel alloying agent predominantly to now a market where the supply-demand dynamics are driven by batteries. And we're really excited to be ready to go in that space. We're also advancing all those strategic imperatives, so do watch out for opportunities on the debt side in particular that will, I think, signal very strongly to our investors that this is an investment-grade Tier 1 asset and de-risk the path to FID. And don't forget, there is some very significant optionality built into this business in our capability to produce electrolyte, but also with Visan Energy, where for over 5 years, we've been building really strong relationship with utilities and energy sector players, and the IP and knowledge of how and where flow batteries have a value in use, and deep relationships with credible flow battery manufacturers internationally. So I invite you to come talk to me. I'm around at the conference, learn more about the business. If you can get behind the vanadium thematic, indeed, I think AVL is positioned as the next global leader, and we hope to be the very next primary vanadium producer. Thank you.